Welcome to Ask the Experts. I'm Reya El-Salahi, and in tonight's live stream we're going inside the Bitcoin bubble. I'm joined by the award-winning financial journalist Tom Wilson. Good to have you with us. And we're also joined this evening by the editor of Which Money magazine, Harry Rose. Good to have you with us. Now, throughout this live stream, you can get in touch with your questions on all things cryptocurrency related, what a Bitcoin actually is, how the digital currencies work, and also, perhaps most importantly, how to spot a scam. If you've got a question, just pop it in the box below, whether you're watching on YouTube, Facebook, or Twitter tonight. It's very good to have you with us. Now, tonight's discussion is prompted by an undercover investigation in this month's Which Money magazine, exposing the so-called Bitcoin trading experts who are getting investors to gamble on high-risk schemes, encouraging them to do so. Now, before we delve into that, Harry, just bust some of the words that we're using here that people might not understand. What are cryptocurrencies? What is Bitcoin?
So what we're really talking about here is digital currencies. So you know, obviously people spend a currency in their home country. They're used to transferring their money to different currencies to spend abroad. All of those currencies are controlled by central banks and governments, and you know are used for everyday goods and services. Everyone knows all of that stuff. Digital currencies are outside of that official world. They're formed and created online, and they are used where they're accepted to pay for goods and services. You might sort of think, well, what's the point in all of that? That seems fine, but why? Why would you do it? And I suppose you need to go back to the origins of them, and Bitcoin being the most prominent and famous and successful of them. Started by somebody in 2009 who's still not entirely known who their identity was. They did it under a pseudonym, and it was really popular and a kind of exciting prospect for people who, for whatever reason, often a kind of political reason, didn't trust central banks, didn't want governments controlling currencies, and they liked the idea of something happening away from all of that. And sort of since that Bitcoin started and similar currencies have started, then it becomes a kind of investment situation. People will then start just speculating, if I buy this now, will it be worth loads more money in next week or next year or in 5 years' time? And actually the value of some of these currencies have rocketed, and as a result of that, you've got people selling investment opportunities, people looking to take advantage of that, scammers getting involved as well. So that's kind of all the context, which kind of caused me to think, well, actually, let's investigate some of that. Let's send somebody like Tom off to try and get to the bottom of how people might be being taken advantage of or sold dodgy opportunities.
So talking of which, Tom, you've gone undercover for this month's magazine. Tell us about how your investigation started.
Well, like Harry says, it's an interesting area. So Bitcoin, the original one's done very well, and then there are hundreds, if not thousands of others trying to do the same thing now. So when we started the investigation, we went to a cryptocurrency fair, I guess you'd call it. It was in Westminster. There were dozens of businesses there offering all their own virtual currencies of their own, all for different industries. Very strange thing, you know, one was launched for gambling firms, another one was for fantasy football, for all sorts of different things. So we started with that one, looking at a lot of the coins there, thinking about, well, do these make sense as digital currencies? And the answer was generally didn't make much sense to me. And then from that we moved on to other areas. So we looked at a company that was selling shares in a Bitcoin mine, so that was supposed to create its own coins, I guess. And then there were other businesses as well, so like you mentioned, the trading course, so, you know, fairly standard free seminar in the first instance. At the end, they're teaching you how to read the markets and work out what's going to go up and what's going to go down. We're generally quite sceptical about that sort of thing. And they were charging, I think they were £2,000 for the course, but it was marked down from £150,000, which just seemed a little bit too good to be true for us.
Yeah, and it's interesting on that point of things being a little bit too good to be true, something we'll get into a little bit later on how to spot those scams when it comes to cryptocurrencies, to Bitcoin. Do get in touch with your comments and questions tonight. Just comment in the box below this video. Whether you're joining us for the live stream of Ask the Experts on Facebook, Twitter or YouTube, we are picking up your comments on all of those videos, so do get in touch. Just carrying on with this, Tom, you've been to a fair few exhibitions, fairs like this, I'd imagine, in your time as a financial journalist. How did some of these fairs, these expos, these talks compare?
It was very different. So I think it's fair to say it was a lot more amateur. It was a lot more of it was almost like a comic book convention rather than an investment conference, I suppose. There were people there in T-shirts, you know, Back to the Future, changed to Back to the Bitcoin, that sort of thing, T-shirts straight to the moon. Some of the stalls selling these coins were fairly embarrassing typos in them, let's say. I think one of them was talking about the global credit industry, which is not very convincing if you're trying to convince a major bank to work with you.
So at this stage, your alarm bells are going off, I'd imagine.
Yeah, very much so. Yes.
I mean, just for contrast, I've been to countless investment conferences over the years, and they are very fusty, kind of traditional, conservative things.
They're slick operations,
the
aren't they?
world, yeah, exactly. The big global wealthy companies putting on events for people like me and Tom, and the contrast with this, it sounds so ridiculous when you hear it, but that seem to be pretty effective as well at actually convincing people that these are legitimate opportunities, and these are interesting opportunities that they should be considering as investments.
What about it was, what was luring about it? What would make people that perhaps were aspiring investors sign up?
I guess it's just the buzz about Bitcoin generally and all these other currencies. So I mean, if you got into Bitcoin at the right time, you could have bought it for pennies, and if you got out at the right time, you potentially could have sold it for $20,000. But the sad thing is most people won't do that. And if you bought in at the top when it was worth $20,000, you'd be looking at losing 2/3 of your money today. It could have been worse if you got out at the wrong time. And that's assuming you found a way to get out, because there's certain sites where you can buy and it's not clear that you can get your money out. Some people have difficulty doing that. No doubt there are legitimate exchanges too, but how are you supposed to know which ones are the real ones, I suppose? So
you went into this posing as an aspiring investor. What were some of the concerning practices that you had come your way?
Not explaining the risks would be the main one, I suppose. It just felt like a frenzy, really. I mean, some of these people were saying that the best performing coin last year increased 35,000%. So if you put in £3,000 at the start of the year, you'd have $1 million by the end of it. But that doesn't mean past performance is no guide to the future. Just because that's happened then doesn't mean it'll happen again. The wheels could come off these things at any time. They weren't explaining the risks involved, so what could go wrong. So maybe the site doesn't work. Maybe you find no one to sell to. Maybe you find a price has been manipulated. Maybe a government doesn't like it. There's so many ways this can go wrong, and unlike traditional investments, you've got no protections whatsoever.
And talking of which, actually, where does regulation come into this, Harry? When people are contacting you asking for your advice as the editor of Which Money magazine, what does the regulation say?
Well, it's the Wild West. It's not regulated. So and in that sense, Bitcoin and cryptocurrencies are no different from any other unregulated investment. So if I said to you, this painting is a brilliant investment, it will in 5 years' time it will be worth 10 times what it's worth now. I can say that because no one's stopping me. It's an unregulated market. Potentially, if I do some dodgy advertising, I might get reported to the advertising authorities and so on. But the regulatory framework that surrounds legitimate investments, shares on the stock market, investment funds like unit trusts and open-ended investment companies, all of those things are very tightly regulated, which protects investors because it stops companies saying outlandish things and promising things that won't be delivered. It's very, very, very strict, and none of that applies here. None of that applies. So you can say, it's 35,000% increase, and imply, or even just say, that's going to happen next year as well, or the year after. And of course, if you're a new investor, you're a beginner, you've not got a lot of experience. Notice, the difference between the regulated and the unregulated won't always be obvious. In fact, the unregulated stuff will sound a lot more exciting than the regulated stuff because they can say whatever they want.
How much of a sense did you get that in your undercover investigation that it's almost the audience that this is for are people that are aspiring investors rather than people that really know their stuff already?
I think that's definitely the case. I mean, to be clear, there was certainly, most of the events I went to, there were people who knew a lot about it, who knew what they were doing, and fair play to them. But there were also a lot of people who'd heard, when you hear about it in the pub, and you want to get involved as well. So you're perhaps not particularly tech savvy, you're not perhaps very experienced in the details of finance. I mean, for most people, this is taking two very, very complex areas, things you don't know much about, and mushing them together. And it's very hard for most people to get their head around it. and you should never invest in something you don't understand.
How much of a sense was there that this is the get-rich-quick scheme that everyone's been waiting for?
Oh, very much so. So the biggest conference I went to, which was in a central London hotel, there were perhaps 200 people in the room, all sorts of backgrounds, but I got the impression there were some people who didn't have a lot of money that were tempted to put their money in. You know, the person was saying that 35,000% returns were achievable. He thinks he had 7 investments that could do that over the next year. I mean, if you put your life savings in that, you could very easily lose the lot. Anything that could go up that much, you should be extremely sceptical in the first place, but anything that can go up that fast can go down that fast as well.
Welcome to Ask the Experts. You're joining us for this live stream tonight where we're talking all things cryptocurrencies. Is the Bitcoin bubble about to burst? And I'm joined by the award-winning financial journalist Tom Wilson, along with the editor of Which Money magazine, Harry Rose. Harry, is Bitcoin the secret to getting rich quick?
Well, I mean, it could be. It might be if you're incredibly lucky and you are you are a successful gambler. Effectively, I think that's the difference. What we're talking about when we talk about Bitcoin as an investment is really a form of speculation. And just as you could wander into a casino, put your life savings on the roulette table and get lucky, you could get lucky with your timing for Bitcoin, but you could get very unlucky. And actually, the volatility of it means that getting your money in and out and making money is going to be incredibly difficult. What you don't have with Bitcoin that you do have with traditional investments is some sense that you're investing in something that has an intrinsic value. Meaning, you buy shares in a company. That company it owns buildings, it owns equipment, it has money in the bank. These are all things that will be there even if your shares go down in value. And so you can make a judgment about, are you paying a fair price for this business, for your slice of business? With Bitcoin, it's entirely just worth what other people will pay for it. And when prices are falling, when those traditional investments have an intrinsic value, there will always be a time when people decide, yes, I want to buy at that price. When there's no intrinsic value, the big danger is that when a bubble pops, that demand will just not be there. There won't be a price at which someone will bail you out, and that's kind of the scenario where you could envisage it going very wrong. We haven't had that yet, and I've been saying things like this for since 2009 when Bitcoin was launched, was created. So ever since then, on one reading of the situation, I've been wrong. It's kept going up. It hasn't always kept going up. It's been volatile, but people have made lots of money in that time. But it only has to go very wrong once for the whole thing to come crashing down.
It's interesting you say that. Recent research by CNBC has found that more than 800 digital currencies are now dead. Tom, does that mean that cryptocurrencies, the bubble of Bitcoin, is bursting?
I think it's a good idea to split them out. So, like Harry says, it can go down a lot further, any of them. But you've got Bitcoin, which is the original one, and then you've got various other iterations. There's thousands out there. 800 have failed, like you say. These are quite strange things. It's basically businesses launching their own currencies, or that's one way of looking at it if you think that they are. But like you say, it's quite hard to work out what's the real spending power of it. For some of these businesses, it's a backdoor to funding. So normally, if you're going to launch a business, you might go to the stock market, you might go to private investors, they'll give you money, and then they'll own a stake in your business. What they're doing here is effectively selling gift tokens before they open the shop. And if they get all the money before they open the shop, some of them won't have a reason to open the shop because they'll make far more money selling the gift tokens than they will ever running the business. So, yeah, certainly lots of them are getting found out, but the problem is for some investors, they've already put their money in and they can't get it back.
Yeah, Tom, how are you seeing some of the concerns that we've heard so far reflected in, Harry, the calls that you're getting to Which Money Helpline? What sort of things are people saying to you about this?
Yeah, I mean, it's a regular source of calls, and and we have a team of experts who can answer your calls and help with your financial issues, and they do get a lot of calls about from people who've lost money on some form of dodgy investment opportunity. And it's funny how really the scammers are so sophisticated and so on top of their game that the details change. You know, it might be binary options last year. This year, Bitcoin's really a kind of trendy thing. So it will the flavour of the cases will change, but the fundamentals will be, you know, somebody's been conned out of some money, somebody's bought something and not been able to get their money out, somebody's bought something that they can't sell again. And whether it's referencing Bitcoin or whether it's referencing binary options or something else, it kind of there are constant themes there. So, you know, one particular example, you know, that people might have seen in the news that that Martin Lewis of Money Saving Expert has been very angry and he's been complaining to social media platforms, including Facebook, that his face is being used on adverts for Bitcoin-related opportunities, and he would never endorse anything like that. He doesn't endorse anything of that kind. Would never do that. You know, his face. Deborah Meaden from Dragon's Den has been used in a similar way. She wouldn't endorse anything like this either. Has no record of doing that, but she's being used in adverts that are promising brilliant returns for new investment. And unfortunately, by the time people call and ask us about it, you know, they've probably got an inkling that something's gone wrong, but it's often too late.
Many people have seen these ads on social media. You'll have seen them on some of the digital sites you might visit. How has this been able to happen? If they haven't, as they've said, lent their face, their voice, their identity for this to be, you know, used in this way to support them, how is it possible that these ads are up there and that people have been conned in this way?
Well, I mean, fundamentally, we're talking about some very unscrupulous fraudsters. So they'll do it as long as they can get away with it. So obviously, you know, social media platforms are working to remove adverts, but their argument would be, well, this stuff is happening on such a scale that it's very difficult to keep on top of that. You know, you know, the nature of fraud and the nature of scams is that they will move on to new tricks, you know, every time the old one stops working, and the scale of it is huge. How much because it sometimes works.
Well, how much of a sense is there that cryptocurrencies are particularly, you know, open to this sort of internet scam?
I think that it's kind of perfect for the fraudsters because you've got a combination of things that really help them. You've got something which on the face of it seems really exciting. You've got returns that are astronomical, you know, much more interesting to somebody who's looking to invest their money than kind of the boring returns that you might get from traditional investments, you know, that come with all the usual risk warnings that you know, lawyers and compliance departments make sure is in all of the adverts. You don't see any of that with unregulated investments. So you've got that. It's just fundamentally exciting, and then you've got you know, you've got lack of regulation. It's a kind of perfect storm, and fundamentally, people are excited by the prospect of those returns. Don't blame them. And some people have made loads of money. So people think, well, why can't I make loads of money? Where can I do this? But I think, you know, so fundamentally, people need to think, well, you know, it's a form of speculation. It's gambling. Can I afford to lose this money? If you can't afford to lose it, then you shouldn't do it. Because when returns are that high, the risks are going to be that high. That's just how it works.
It is interesting you talk about the frenzy, the excitement about cryptocurrencies. Tom, how much of a sense did you get when you were posing undercover for this month's Money magazine, that you were almost getting swept up in it? Was there any time that you felt yourself almost being excited by what you were being sold?
Yeah, I think so. So I think I'm probably more up on the technology than Harry is. I think that there are interesting applications. I think the principle's pretty sound. It's just that there are all these risks you need to think about. Just because a principle's sound doesn't mean it's going to work. Imagine MySpace might have been the future of social media, but if you invested in that, you won't have done very well at all. Even if one of them does okay, there's no guarantee it's going to be this one at all. But yeah, there were times when I went along. One of the events I went to, which actually we didn't talk about in the article because there were just far too much to talk about, but went along, quite nerve-wracking. It was in a basement, out of hours, little intimidating. And the guys gave the best presentation on it I've ever seen. It was incredibly well done. They knew all their stuff. They explained how it all worked. They weren't promising me any returns at all. They weren't selling me any platform on how to do it. They were just going, we'll give you something you can work out yourself in a year, in a day, if you pay X. And I thought that was quite interesting. But it was precisely because they got the tone right and they weren't making promises that they couldn't deliver.
On the article, actually, which is brilliant, if you hadn't read it yet, I'd really recommend going online. You can visit which.co.uk/money, just search for Inside the Bitcoin Bubble. In the article, there's a great bit where you talk about going to one of the talks, and it's almost like a preacher on stage. How much of a sense was there that you're almost kind of selling a lifestyle alongside, selling people a dream?
Oh yeah, very much so. So I've been to events like that before, but this one was another level. It was central London, very, very nice hotel, room packed full of people. I suspect a couple of the people in there who were more enthusiastic perhaps knew the person running it already, but he was talking about his friend who was a builder who he made a fortune for, other friends he'd made a fortune for, what can go right, what can go wrong, that you can turn a couple grand into $1 million, all of this, and it's exactly that. They sell the lifestyle, so they don't tell you this is how much money you'll make. They'll go, how would you feel if you could retire tomorrow? Who wants to be a millionaire? Who wants to make £1 million a year? All that sort of thing. Really putting that thing in your head of what would it be like if I had that. Once that idea is there, people get hooked on it and they start not thinking so critically about what could go wrong.
Understandably, which is why we're now going to move on to take your comments and questions. Do get in touch this evening by posting it underneath the video you're watching, whether you're joining us on Facebook, YouTube or Twitter. It's your chance to ask the experts. Joining me this evening, the award-winning financial journalist Tom Wilson and the editor of Which Money magazine, Harry Rose. Right, first one's up from Lois on Facebook, who says that she isn't convinced that the Bitcoin bubble is about to burst. She says this is not just market waves, as in every other market, but Bitcoin has already plummeted from all-time highs. However, cryptocurrency as a concept surely has real market value. Isn't it all about demand and supply, says Lois. Harry, do you want to pick that up?
I mean, Lois, you're absolutely right. It is about demand and supply. My point from earlier, I suppose, is that that's all it is. It's supply and demand. That's all you're relying on when you're making. I mean, it's slightly simplistic, but there are not fundamentals. Even there are other commodities that are volatile and high risk. You can invest in gold. Gold doesn't really have a function other than that people have always liked it and valued it, and people like to wear nice jewellery, and there's always been a perceived value in it. Bitcoin doesn't even really have that, other than what it does have is if you are very pessimistic about the prospect for the global economy, and you actually think you'd lose money in traditional investments, you might see it as a safe haven. I think that would be a strange way of looking at it when you're talking about something so volatile. The volatility really shouldn't be underestimated here. I mean, it's stock market waves. Absolutely, that's how stock markets work. Investments go up and down all the time, sometimes by quite extreme. But an extreme down the stock market is that the market's fallen by 1%. 2% might get you on the news, 10 o'clock. 3%, yeah, that would be on the news. But Bitcoin and cryptocurrencies, you're not talking about 1 or 2% falls on a bad day. You're talking about 25 or 50% falls on a bad day. So everything is magnified to such a degree that means that you as an investor, I mean, people are invested in Bitcoin. Whether they can sleep at night in the knowledge that the value of their investment is swinging so wildly is another question, I think.
Okay.
Yeah, exactly that. So, in the case of the stock market, if 2% gets wiped off, that would be a big story. I mean, since Christmas, we're talking about hundreds of billions of dollars being wiped off the value of Bitcoin. If people bought at the wrong time, they've lost 2/3 of their money. That's how much you can lose here. You wouldn't get that in normal stocks and shares in normal conditions.
Moving on to your questions, Kate says, how are cryptocurrencies created and why did they start, Harry, I think you mentioned this earlier, in 2009?
I mean, so Tom, you'll be better than me on the kind of technical side of how it's created. I mean, so I touched on this enigmatic, mysterious guy who may or may not be some Australian academic or guy in San Francisco, depending on which expose you've read recently. It's still not certain who he was, but it was geeky guys on the internet doing computer code and coming up with something they thought was really cool. And that appealed to certain people with certain political views. It's appealed to people who want to buy illegal things anonymously online. That's a function of cryptocurrencies. So that was kind of the cultural setting.
Mm-hmm. Yeah, so it's basically, like you say, it's in a computer program. So it's all on the blockchain, and that sounds quite magical, but essentially a blockchain is basically a spreadsheet running on several computers at the same time. So there's a spreadsheet saying where all the coins are and who owns them and all the payments between people. All the computers run the same thing. They all update at the same time, so you know who's in who's. So that's doing the job of the banking system, if you like, transferring payments, working out who owns what. But in terms of how they created, someone's written a program that all the computers are running to manage that spreadsheet. That's all it really is. So to go back to that point about supply and demand, there may only ever be 21 Bitcoins, but a new version of Bitcoin could launch every day. So talking about that supply, all right, the supply of Bitcoin is limited, but the supply of cryptocurrencies, we could launch one this afternoon if we wanted to. There's no real limit on that. So you've got to think that's going to affect the value over the long term.
We are fast running out of time. I want to get to as many of your questions as possible, so let's see if we can rattle through these. Alex says, what is Bitcoin mining and what is crypto jacking?
So Bitcoin mining is that process of managing that spreadsheet. So with the normal banking system, you trust your bank to manage your bank account, work out how much is in it and move payments in and out of it. With Bitcoin mining, there's no bank doing that. So all the computers basically enter a raffle, if you like, where they handle those payments, they handle those transactions. And then every 10 minutes, one of the computers doing that gets paid a reward in Bitcoin. So that's the mining element, because they get paid to do that work for the banking system, if you like. Cryptojacking is where malware, it might be running on a website, it might be running on your phone, it might be running on a computer, basically get some code running in the background. So your computer is basically mining for someone else. So someone's got one computer, or they've got a network of computers running this dodgy software, and every time it wins this raffle to process Bitcoin payments, the person that wrote it, they get paid that money.
There you go. I think a really good question to end on, I'm afraid to say we are almost out of time, is from David, who says, what can you do if you've fallen victim to a Bitcoin scam? Can you get your money back?
Probably not, is the sad thing. So if you buy on a debit card and you buy on a credit card, there are certain protections out there. So it's called a chargeback if you use a debit card. It's called Section 75 if you use a credit card. You basically go to your bank and ask them to unwind the payment. There is no guarantee they will do this. There's no obligation the bank will do this, but it's certainly worth trying, because sometimes they will pay it back.
Really interesting Twitter poll this evening. We asked our followers, would you invest in cryptocurrency? 80% said no way, too risky. 5% said yes, but I'd regret it. And 3% said yes, I'd recommend it. Harry, does that come as any surprise?
Not really, no. I think, hopefully it means that, the Twitter followers we have, are a broadly sensible bunch, I think. The savvier end of the spectrum. That's great to see. I think, that shows you that there is, we've had this mania with something that is really quite a minority pursuit. This is still a niche thing. It's just created a lot of headlines and a lot of attention, and some of that kind of becomes self-fulfilling. The more attention it gets, the more people become curious. So no, I don't think that surprises me. But it's interesting that kind of level of interest has coincided with a period where we have had this enormous bubble.
The article is in this month's Which Money magazine. If people would like to get it, would like to read it, it's brilliant. I'd recommend it. How can they, Harry?
They can go online. If they read, in fact, the best thing they can do is read Tom's investigation, because it's genuinely one of the most entertaining things I've ever edited and put in the magazine. It's a great read. It goes into loads more depth on all the things we've been talking about.
It's a pretty vivid picture as well.
We'll put a link to that alongside this this video. and there'll be a link in there if they want to try the magazine. You can try for £1 for a trial. Please do. It's a magazine that we're very proud of, and you get to read Tom on a regular basis.
Brilliant. Really good to have you both with us. Thank you very much indeed to Tom Wilson and Harry Rose. And if you'd like to see that article online, you can visit which.co.uk/money. Just search for Inside the Bitcoin Bubble, which investigates the crazy world of cryptocurrency. Thanks for watching.